Hello beautiful people, thank you very much for checking out our impermanent loss calculator. In this video we'll be going over how to actually use it. It basically breaks down into two different sections. You have the entry liquidity pool info. This is when you start entering or basically start the exposure into the LP. And then you have the current liquidity pool, which is the exit. It could be now looking back in time, or it could be from this point right now looking in the future. You can kind of play around with either one, but in this video we'll be going over both of them. We'll first start off looking into the future 2 months, and then in the second example we'll be going over looking back 2 months. So let's jump right into it. We first need an example for a liquidity pool. So I just picked one out from Beefy Finance. It is the AVAX Phantom liquidity pool, Avalanche or AVAX, Phantom or FTM. It is on Spooky Swap, and you get paid out in their native token. And what Beefy Finance allows you to do is it will harvest the rewarded token and then sell 50%, put it into AVAX, sell the other 50%, put it into Phantom, and then provide liquidity inside the liquidity pool, and then add that token into your total balance. And that is what an auto compounder or a optimizer does. So we'll be using this as an example. We'll first put in the AVAX in this section right here, because this is the assets in the liquidity pool. And you have your first asset, which is AVAX, and then you have your second asset, which in this case is FTM. In the example here, it is Joe, which is Trader Joe's native token. And then the next question or input is initial price of asset in US dollars. So let's say in this example, I'm just going to quickly drag this down. We'll put in, instead of Joe, we'll put in FTM here. And then let's say we are looking back 2 months in this example, and then we'll say we're looking forward in the next one. So let's say in 2 months ago, let's say AVAX was like $120, and let's say FTM was $1.70. Let's just say, I don't exactly know what the numbers are, but those are our examples in this particular situation. And then let's say we have, let's say 10 AVAX to make it very simple. Here is where the first tool comes in. What we need to do is put 50% of the total value of the liquidity pool in one asset, and then put 50% of the total value in the other. So let's say we have 10 AVAX that we're putting into this liquidity pool. We would put in 10 for the asset one, which in this case is AVAX. It's currently trading at $120, and then, or it's trading $120 2 months ago. And then we entered 10 AVAX 2 months ago. And then we have FTM, 2 months ago was trading at $1.70. And in order to understand what the value we need for Phantom is using 10 AVAX that we entered, we can quickly look at these two lines right here. If we want to use the quantity one or the asset one value, we would use asset one quantity. So then we would put in 705 Phantom. And what this allows us to do is 50% of the total value. So $1,200 is in AVAX and $1,200 is in FTM. And this calculator here allows us to use one asset to get 50% of another. So if you're, let's say, putting in 1 ETH or a certain dollar amount or a certain coin amount that's very easy to gauge, like I quite often do that, where I'll put in whatever X amount. I won't put in halves or anything, just because it's a little bit easier. I don't have to put in little decimals, but that's a way that allows you to get 50% of the value on one asset and 50% of the value in the other. And like we talked about, in this example, we'll be going from 2 months ago to the present day. What would be our permanent loss? So let's say on February 12th is when we started. So we can see it's 0212. And then in the example here, it is an APY of 30.6%. So then we'll put in 30.6 here, like so. And that is the completion of the entry liquidity pool info area. That's really all you have to worry about. The key things or the key takeaways would be the initial total value, which is showing right here. This is the value if you added your AVAX, the total AVAX that you put in, and the total Phantom that you put in. You'd have $2,400, so you have $1,200 in each asset that you're putting into the liquidity pool. Next, we'll be and then we already discussed the 50% LP split a little bit early on. So now we're going to be going on to the current liquidity pool info. We first have your asset 1 and asset 2, and then the current price of the asset are the two inputs that we need to put in, and then the end date is the final input that we need to put in, and that is all we need to do for inputs in the current liquidity pool info. So 2 months ago, prices were higher than they are currently right now. And let's say AVAX dropped from $120 down to $85. And Phantom went from $1.70 to $1.10. And the current date is going to be the date that we want to use, and that is around 2 months in terms of the time frame we entered in to what we're calculating right now for impermanent loss. So now we're going to go over kind of the meat of the page, or the area that provides the most amount of information. So this first number here, the total value before interest, this area right here, this is calculating the basically amount of funds you have before interest due to the rebalancing of the liquidity pool. Basically, it is showing you what the amount of the LP value is without the auto compounding. So in this example, the total value before interest after the 2 months before interest is $16.24. We can see that it's quite a bit of a move to the downside from the total initial value. And if we did not enter the liquidity pool at all, if we just held our AVAX and if we just held our Phantom separately in just cold storage, the total value would be around $1,624. So you can see not much of a difference here, very little actually, but we can see that there is a slight difference due to the rebalancing. Impermanent loss without interest. So this is the impermanent loss from being in the liquidity pool where there's rebalancing, and you're going to get a little bit of an asset separation, which is going to cause that impermanent loss because it has to be 50-50. And this is just a percentage here of the USD value compared to the initial principal put in. The next line here is the number of days in the LP. This is just the number, pretty self-explanatory. It was 59 days, and this was from February 12th to April 12th, is 59 days here. The profit loss with interest is the main area that we want to be taking a look at. We can see this is the interest that we were able to accrue in the 2 months between February 12th of 2022 to present day, which is April 12th, 2022. We made $78, which is 5%, which is a pretty good amount. And then when you're looking at it as the total current value, what this uses is the value before the auto compounding interest plus what you gained from the auto compounding interest will generate this total current value. And then what it checks is this total current value with the interest applied greater than if you just were to hold it in two separate cold storage wallets. And if it's higher, which in this case it is substantially higher, it is over $1,700 because of the auto compounding interest, and you would have only had $1,626 if you just held it. And that's why we got a positive ROI of yes. It is a positive returning investment under these certain parameters or scenarios or random inputs that you put in basically. So that's going to be how you look back. We will quickly look at, let's see what happens if Phantom, because it is a smaller market cap token or asset really, coin I should say, it might have a relatively weak period in the bearish time, which it did. So let's say it just went to exactly $1. We can see what it does to the impermanent loss and the overall total current value. So now, because we have more of an impermanent loss, we can see it did increase, and it's still worth it because the total current value is still higher than if we were to just hold it. But we can see when there is more of an impermanent loss, it's going to increase this number, and at a certain threshold, the impermanent loss is going to be greater than what you made with interest. So it could be the same thing if one asset goes up. It would be the same sort of scenario. So let's say instead of 85, it's 90. We'd also see a significant increase, or not a significant, but an increase in impermanent loss, as you can see right here. So really the goal is to have two different assets that are not going to separate too far from each other. For example, if you have a stablecoin paired with a risk on asset like AVAX or FTM, Scream, really anything that is going to not be a stablecoin, it's a risk on asset, it's not pegged to a certain currency. Like Tomb would even be an example of a risk on asset because it is pegged to Phantom. So it would really be only things that are pegged to stable coins. But if you do have something that is a stable coin and a risk on asset, you are basically going to guaranteed have an impermanent loss because it's always going to need to rebalance to 50%, which is going to create that impermanent loss. You just really hope that the APY or APR is going to be significant enough in order to make it worth it. And that's why understanding at what price is the APY not going to be worth it, something to consider. And the two main things that you are not really able to control is the price and time. And we can see you can play around with it. So you can kind of gauge, is it worth it to enter in this particular liquidity pool using this tool? So now we're going to go and use a different example here. Let's just say we are pairing AVAX with US dollar, USDT, UST, whatever it is. Well, then instead of changing we'll first want to change FTM. Let's just say it is USDT. I know a lot of people hate Tether, but besides the point, it's just an example. And the initial price is going to be $1 because hopefully you will never have it under $1 or over $1 really. The whole point of it is being a peg to the dollar. And let's say we want to, again, start off with 10 AVAX. So we want to use the asset one quantity, which in this case, asset one is AVAX. Then we'll put in our $1,200 here into the value of our asset number 2 in USD. And we can see it lines up perfectly. You got $1,200 and 10 AVAX, which is the exact same value, creating $2,400 in your total value to start off. In this example, let's say, actually, AVAX is like probably trading at $85 right now, so we'll have to quickly put in the correct numbers here. Perfect. So then let's say we're trading from right now, so today, April 12th, and let's say the APY is 25%. You could probably find that. That's not too hard, especially if you're trading or looking for a stablecoin that is a little bit less adopted. You're going to have higher yields. So it's going to go from today, and then we'll look 2 months into the future. So we will go in June 12th. And let's say the current price is always going to be $1 for USDT, but for the price of AVAX, let's say in the next 2 months, it does really well. It goes from $85 to $140. We can take a good look at what would be the impermanent loss. So we'll just take a click. And we can see this is a prime example of the impermanent loss being more than the interest that you're able to generate having exposure in the liquidity pool. So then we'll play around with the number here in US dollars to understand what would be the point at which it wouldn't make sense to be in the LP. So let's jump in again. 3 things that we need to input for the current liquidity pool info is the price of asset 1, which in this case is AVAX, the prices of asset 2, which is USDT, and then the ending of the liquidity pool or the current liquidity pool info. Could be the future, could be the present, whatever it is. It has to be basically the ending of when you started. Now to break down the actual information within where it's most important. Total value before interest. So this is because you entered in the liquidity pool, removing all the compounding and the interest, what would be your initial LP tokens worth? And it started off $1,700, and your current LP tokens, not counting the interest earned, is 2181. But if you just held them, if you held AVAX in a cold storage wallet, and if you held USDT in a cold storage wallet, you would actually be holding 2250. So you can see the impermanent loss here, and we can just quickly see permanent loss without interest. It is $67. So yeah, it's a decent amount, and we can see the profit and loss with interest in terms of a percentage is a decent amount. It is at just 1%, $22. So really it is not covering the impermanent loss at all. And that's why we have positive ROI question mark of no. And we can see the total value. This is the total value where you have the LP tokens plus all the compounding within the 2-month parameter. You have a not a portfolio, but if it is your portfolio, or if it's just like a particular account, it is worth 2204. And then if you just were to hold, it is 2250. So we can see it's less, so it's a no. So hopefully that was a good overview on how to utilize this. We're now going to actually play around to see when it would make sense, but that's kind of the end of the main structure of the video here. We can see it's still a negative ROI in return relative to just holding, even if you're at 130. Let's see 120. There we go. So we can kind of see the threshold here, 54. So let's do a little bit higher to see if what's the threshold. There we go. So basically 127, 128 is the point where it wouldn't make sense to hold it. So within that 2-month period, do a little bit of TA, gauge, do you think it's plausible that it could be hitting that? If it is, potentially maybe just holding or looking for a higher APY opportunity, or maybe pairing it not with a stable coin might be a better option, because if you are pairing with a stable coin, you're guaranteed to have an impermanent loss, which is pretty significant if AVAX does a pretty good size move to the upside. So if you do have any questions, please enter our Discord, say hello, and ask your question. We're happy to help out. Hopefully this was a helpful video that's able to provide a lot more clarity, context for how to use this tool, and hopefully we'll see you in the Discord. Bye for now.